Hi, I'm Jeff Hirsch here at the Money Show with Marilyn Cohen. She's the president and CEO of Envision Capital Management. It's envisioncap.com is your website, correct?
That's correct.
And she's the only bond person here really at the Money Show. And you have some strategies, techniques for protecting your portfolio in this aging bull market, as you put it. What do you do? I mean, I do some stuff with bond ETFs seasonally, but you were saying that's not necessarily the best route to go.
Well, there's such a huge number of ETFs that are available to do-it-yourself individuals. And I would say now that this tug of war between the Federal Reserve continuing to increase interest rates and the Trump administration wanting to stimulate the economy,
which costs money.
It costs money, and that money is getting more and more expensive. So for your audience that is an exchange-traded fund investor, I would say you need to shorten up the portfolio, meaning buy ETFs that have short to intermediate term duration. Duration in plain English means how sensitive your portfolio is to interest rate gyrations.
Right.
So if you have an ETF that has a duration of 9 years and rates move up another 1% from here, you're going to be walloped down 9%. If your duration is two years, then you'll barely feel a nick.
So how do you do it? You do it with individual bonds. What would you recommend, honestly, more specifically?
Well, first of all, believe it or not, Treasury bills and Treasury bonds aren't that bad anymore.
No.
You know, they used to be, below 1%. Now you can get well in excess of 2%. So for a safe haven to kind of offset some of the volatility that we're seeing in the bond market and that you're seeing in equities, maybe some short-term treasuries, corporate bonds in the front end of the yield curve, meaning short-term bonds.
Commercial paper type stuff? Or?
Not commercial paper. American Airlines has some certificate trust bonds due in 2022, yielding about a 4.15%.
That's pretty good.
And they have a sinking fund, so they pay so many of them off every year. Not bad. Look at your face.
Not bad.
It's not bad.
That's a good, decent yield this day and age.
It's got some yield. So there are things out there that are yieldier, much yieldier than they were, and really are good competition for people that think that stocks with dividends are the only way to fly to earn some income.
Excellent. So check out Envision Capital and figure out how you can add some bonds into your portfolio. Thank you for joining us, and thank you, Marilyn.
Thank you.